Hey traders, and today a short, sweet, but very powerful video where I'm going to explain 3 key areas which can help you to significantly reduce the amount of losing trades you're taking. So number 1 is sticking to a higher time frame narrative. So whether you're trading off the 15-minute or the 1 minute, I seriously urge that you always come from a higher time frame narrative. So what's your daily bias, or at least what is your 4-hour bias? If your daily or your 4-hour is bullish and your entries on the 15-minute or the 1 minute, which one is likely to play out over time? The one that aligns with the higher time frame. Not to say that counter trend trading doesn't work, because it does, but you have to be more accurate with your entries. You have to be more accurate on things like liquidity runs, and you have to be a lot more conservative and precise when exiting your trades. And you're probably going to have a lower strike rate with counter trend moves. So it's always best to follow the overall trend and not just the trend on the time frame you're entering on, even if that means it's the 15-minute. Always go up to, my recommendation is 4 hours, super powerful. If you can look at a daily bias, that's great. But really, over the period of a week or 2, 3, 4 weeks, the 4 hours should give you enough indication of where price is likely heading next. Follow the trend. The trend is your friend, right? And that's something you've probably heard many times before, not just from me, but other trading mentors and coaches out there. And it's definitely not one that you want to miss. Now, number 2 is your risk management strategy. Now, this is something we talk about a lot in the community at Evolution, because so many traders I see come in with that mindset that they must focus on a trading strategy, a technical edge. And of course that's important. That's part of the foundation, right? But then they go straight into live trading or straight into purchasing a funding challenge. When they hit drawdown, which is the topic of the video, they find themselves just in this downhill slope of drawdown, and they're asking, how can I get out of this drawdown? Or it's affecting them mentally, right? And that's because they don't have a solid risk management strategy before diving into that challenge or that live account. So for example, if you start a funding challenge, or any account for that matter, it doesn't even have to be a funding challenge, but let's just say you've got 10% drawdown on a funding challenge, right? And you start from opening balance. The first thing that you should know is how much risk are you risking on that first trade. If you've got an edge, if you've got a technical strategy, and you've got maybe 1 or 2 entry models, doesn't matter what day of the week it is, what time of the day it is, what session, is it London, is it New York, what time frame are you entering off, what size is your stop loss, or none of that really matters in terms of how much percent of that account are you going to risk. Is it 1%? Is it 0.5%? Is it 2%? Like whatever it is, you should have that written down somewhere. And then what happens if that wins? What are you going to do on your second trade? Or what if that first trade loses? You're in drawdown instantly, which is normal, it's fine. But what are you going to risk on that second trade, right? If you have no idea what that plan is going to be, then it means you don't have a risk management strategy, which is super important, right? So, and I hear a lot of other trading coaches talking about this now, which is brilliant. I love it. I've been talking about this for months. And I think any trader that has an audience, we should be talking about it more often, because it's not all about making as much money in a quick amount of time as possible. Something that I mentioned months ago, and it's stuck with me. And everyone that I teach, I say you either win slow or lose fast, especially when it comes to funding challenges and live accounts. And what I mean by that is not necessarily you're always going to be really slow at making money, but I mean be more careful, be more conservative, and focus on the risk element and how slow you can make that process, that risk of ruin, that drawdown. How can you reduce that, rather than, the statistics of funded challenges, most people blow their account in the first week. So what are they doing? They're trying to win fast, right? So if you switch the mindset to, I'll try and win slow and reduce my risk when I'm in profit, and reduce my risk even further when I'm in drawdown, and therefore I'm not going to lose fast because I've got X amount more trades as a buffer. So for example, let me talk you through the strategy that I use personally on funded challenges, and has allowed me to pass funding challenges at the back end of 2023, most recently. So with a starting balance, I'll risk 0.5%. Why? Because I'm just risking enough that gives me skin in the game, but it's not too much that will cause any kind of aggravation if I lose my first trade and get into drawdown. So I'm only 0.5% in drawdown worst case, or if I'm targeting a 3-to-1 RR, then I'm 1.5% in profit. So it's almost a win-win. And every time I'm entering a trade, I'm not actually thinking about how much money I can make or what percentage I can make. It's about what risk have I got on the line here. So if I'm only risking 0.5%, I've got no problem picking that mouse up and executing on that trade, right? Because I know that the edge is there. I'm confident in that. I'm also confident in the amount of money or the amount of capital that I'm risking on that should it lose. Now, I will risk 0.5% of that account anywhere between a negative 3%, so a 3% drawdown, and a positive 3% profit. Anywhere within that 6% zone, I'm risking 0.5% of the opening starting balance of the account. If I'm above 3%, I'm now risking a full 1%. Why? Because I've got money to play with, and I would then need to lose a trade to go back to 0.5. So again, it's winning, but it's winning slowly. I'm not risking 2-3% on one trade, because if you do that, you've got 3 trades and your account's blown, right? Similarly, if I'm more than 3% in drawdown, which is rare, but it can happen. My most recent funding challenge, which I documented on YouTube, I got to, I think, 5% drawdown in the challenge, and maybe not even, I think it was like 0.8% drawdown on the verification. But I've been in drawdown 6, 7, 8% before and crawled it back, right? And the key thing is here, I wasn't risking 1% on every single trade, right? Of course, it's possible. The more you risk, the quicker you can get back into profit, but also the much quicker and much more likely you are to lose if you're in a losing streak or a losing mindset, or the market's just going against you time and time again during that trading week. So if I am any more than 3% drawdown on a funded account, I reduce my risk by half again. So I'm going from 0.5 down to 0.25. So this allows way more than the 9 or 10 losing trades to breach the maximum drawdown on that account, which is typically 10% drawdown. Some are 8%, some are 12, but the average is 10. So instead of like 9 losing trades plus commission, because you don't really get 10, it's more like 20 or 30, right? So it's much harder for risk of ruin, and it's much easier on your psychology. And plus also, you can still make profit. Yes, you have to make more RR to get to a 10 to 1 or 10% to pass the challenge. But once you get to positive 3%, you can increase your risk, and you only need 1 or 2 winning trades and you've passed the account. And the third one I want to talk to you about is one that's drilled into you as much as possible, but I feel like a lot of traders need this constant reminder, especially those that are not in communities, not in a mentorship, etc., which is fine. You don't have to be, but it's the only downside to that is you don't have any accountability. So I'm going to hold you accountable and say you need to stick to your edge. You need to stay disciplined. I know how easy it is. I've been in trading over 8 years now, and still from time to time, it's rare, but from time to time, I'll be at the charts and I'll feel this chip on my shoulder thinking, I haven't been in a trade for a week, maybe I want to get involved, or what this looks like it's going higher, or it looks like it's going lower. But I very quickly snap myself out and go, what am I doing, right? I'm in no rush to make money, and likely if you're rushing to make money and you're going against your edge, 9 times out of the 10, it's going to result in more loss. And you've got to go through experience, or you've got to have someone that's holding you accountable time and time again to remind you that's not the right way to do things. That's the surefire way of losing fast. So having a defined risk management strategy, key. Having a defined technical edge and trading strategy, super key. Sticking to it at the same time. It doesn't matter if you're 5 losses in a row deep, right? Because your next one could be a winner. Don't let past trades determine your future behaviors. And also, it could be just that the market is against you. Maybe the higher time frame is shifting at the moment, and the mid to lower time frames, or your entry model time frame, has become very corrective and just range bound, and it's making it very difficult for you to get to your take profit, or even for your setup to arise. If you've not taken a trade for 2 or 3 weeks, that doesn't mean anything. You could go 3 weeks without a single trade, and then 3 days with a trade every single day, right? The market is completely random, and I've seen it time and time again. I mean, our latest refinement of the Power of 2, which is going to be released mid-February, which is the biggest refinement to the strategy that we've made in the 12 months we've been trading it, and it's producing excellent results. We're trading it exclusively on Euro US dollar, and it is producing double digits on average every month. It's producing on average 2 trades every week, but there are periods where we go 2.5, 3 weeks, there's nothing. But that's the beauty of a higher time frame strategy, and it gives you more freedom to go and do other things. It's also a lot less pressure on you to analyze and spend too much time at the charts, which is unnecessary. And look, with Evolution X, our lower time frame, our 1 minute time frame entry model strategy, the main legs and structure of that strategy is from our latest refinement of the power of 2. So once our daily 4 hour 15 minute is sorted, it's only then do we drop to the 1 minute. So we could go days without looking at the 1 minute, right? And if we are looking at the 1 minute for a strategy, it's cross-referencing it with our edge, with our plan, like going from line to line. Okay, 4 hour, I'm happy with that. 15 minute, I'm happy with that. We're in a session, we're in a kill zone. Okay, I'm gonna drop down to the lower time frame now. And this is what I want to see. If I don't see it, I'm going back to the 15 minute, and that's where I will stay. And that happened this morning, right? The 4 hour was setting up, the 15 minute was setting up, 1 minute didn't set up. And no trade, right? It's super clean. And that's where you wanna be from a technical standpoint. See, I know exactly on my next trade how much I'm gonna risk. It doesn't matter what day of the week it is, whether it's raining or it's sunny, how emotional I feel. I know, according to my risk management plan, how much percentage of the account I'm gonna risk on that trade. And I also know from a technical point, what requirements I'm gonna need in the charts on every time frame that I'm using, regardless of the strategy, whether I'm gonna enter off the 15 minute or the 1 minute, I know exactly what I'm gonna do. And the outcome of that is irrelevant because I need a larger sample size anyway. But there's no hesitation on what I need to do, and I'm gonna stay as disciplined as I possibly can because I know that in the short term, my emotions might be nagging at me and saying, no, you wanna be involved in the market. But you've gotta think long term and go, well done for those 2 to 3 weeks where you felt a little bit emotional, a little bit impatient, you wanted to force trades but you didn't. Congratulations, because now you've got more capital than you did have 3 weeks ago, and a lot more capital and better emotions compared to if you had gone off your trade plan and against your edge and just been very emotional and forced trades for 2 or 3 weeks. Because we all know, those that have done that, it never serves you in the long run, right? It never ever serves you. But anyway, make sure you watch this video again and recap and look at the description. I'm gonna put those 3 key topics in there for helping you to go from a losing streak time and time again to seeing some blue on that MT5 history screen. And make sure that you subscribe before you leave. Go and check out my latest video where I passed a funding challenge, and listen to the mindset and the language that I'm expressing during, before and after each trade that I took, because that was very much a vlog. I didn't document every single trade on the challenge, but the verification was very much in depth, and I was expressing how I felt while I was analyzing the charts. I was telling you how I felt after executing and being tagged into a trade. There are periods in the video where I'm in drawdown, and there are periods where I'm close to profit. And just listen to how I'm talking. You can see that there is excitement because towards the end of the video I end up in a supercar garage, but that's nothing to do with the challenge. And also, obviously, the excitement of passing a challenge and doing it on camera is something quite unique. But if you're doing it behind the scenes, you should be keeping your emotions as neutral as possible. Anyway, thanks for watching, and I'll see you on the next one.